Hello everybody, Alex here. Welcome to my finance and accounting education channel here on YouTube. Today we are going to talk about a company which is a European company. It's a real estate investment trust from Germany. If you remember, I did a mini series of 5 episodes, if I remember correctly, a while ago, in which I expressed my interest in selecting a couple of European REITs and investing in them. I did an analysis of the stocks 600 REITs, so the REITs which are included in the European index of the largest companies, and I focused on 3 countries, so on Germany, United Kingdom and France, the biggest ones basically in Europe. And this company, which is called Aroundtown, is from Germany, but we will see exactly later that it doesn't really have property only in Germany, but however it's listed on the DAX stock exchange. And we have the results for the full year 2021 result, which were released on 29th of March. I found because I put my money where my mouth is, I am already invested in this company. It's also a disclaimer: this is not financial advice. You should not invest or divest into companies based on my recommendations, because these are not recommendations. I am not a financial analyst, and your decisions are yours and yours alone. But before we jump right in, I'm going to ask you to subscribe to my channel, to hit the bell notification button, and you will never miss an update on my site. I do them quite regularly these days. You should expect new and hopefully interesting videos from me on Tuesdays, Thursdays and Sundays as well. That being said, so the introductory part is over. Let's jump right in. So we have Aroundtown, the financial reports. We are going to take the largest one, the presentation. So as you can see, it's for the year ending December 31st, 2021. Okay, they have a lot of properties, including in the center of Berlin, which is very good. From the table of content, we are going to be very interested in the key financials. So in the business operations key financials, we are going to be interested in the notes on business performance mostly, and also any mentioning about the dividends. Actually, they are having some interesting comments about share buybacks programs, which I want to share with you. So these are the financial position highlights or key financials. Let's make them bigger so that everybody can see. So we have total assets, 3 years. The asset base is growing, which is always good. They seem to have a good position also in cash, and an improving position in cash and liquid assets. Yeah, so not that much to say about the balance sheet. But if we go to the P&L, we have an increasing revenue with 12% from 1.18 billion to 1.3 billion in 2021. The net rental income grew by 8% from 1.03 billion to 1.085 billion. Adjusted EBITDA, earnings before interest, tax, depreciation and amortization, grew by 3%. FFO before extraordinary COVID adjustments, basically flat. Then there are FFO1 per share, it's actually grew by 11%, and I told you that we are going to talk about these share buybacks programs as well, because although the FFO stayed flat per share, it improved by 11%. FFO1, so after the COVID adjustments, unfortunately going down by 1%, but it's nothing tragic. FFO2 growing by 4%, and profit for the year growing by 19%, so from 906 million to 1.078 billion. Now, if we are talking about earnings per share, we have a growth of 10% from 0.5 to 0.55, and diluted at 8% growth only from 0.49 to 0.53. And the thing which is the most important for a REIT investor, which are the dividends per share, growing. I think paid in 2020, for 2019 they were 14 cents per share. They grew to 22 cents. Now they are going to be 23 cents. So it's just a proposal, and it's subject, they are also saying, is based on 75% of FFO1 per share and subject to AGM approval. What's the FFO? So funds from operations. It's a measurement which is used by the REITs in order to eliminate from the performance let's say the developments which cannot help them pay dividends, like for example revaluation of property, so gains from revaluation of property, or which are not really cash related, and hence even if they generate a lot of profits based on the revaluation of property, they cannot pay dividend based on that unless they sell also the property. Now we have the European real estate indicators, which are very specialized, and I wouldn't linger that much around them. So they also have a nice portfolio in Frankfurt, and I think I said we are going to go directly to the management, so notes, management discussion and analysis, so to notes on business performance. So let's just do that. So we have some other nice buildings here. So we have the selected consolidated income statements data. We already looked a little bit at the net rental income, EBITDA, FFO1 and 2, profit for the year improving, so quite good results from my point of view. So the revenue, this is here like a breakdown of revenue. So recurring long-term net rental income growing from 953 millions to 1.063 billions. They have some properties which are marked for disposal, and they somehow need to separate the rental income from this. And then they have the operating and other income, which is also growing. So all in all, a very good and a very positive development. Then we have the share of profit for investments in equity accounted investees. So this is like, let's say, that they own shares in other companies. And then we have the property valuations, capital gains, also everything positive, so improvements. Then we have the property operating expenses, which are also growing, but since the profits are improving, that means that the growth in the expenses is outpaced by the growth in revenues. And then we have administrative and other expenses growing by only 5 millions compared with the growth in the revenues that we've seen before. The finance expenses, however, have reduced. So they went from 200 millions in 2020 to only 180 in 2021, which is very good. Other financial results also with 5.7 millions lower in 2021 than 2020. All in all, so there are absolutely no negative or significantly negative numbers here. We have, you see, the profit for the year growing from 906 millions to 1.078 billions. Earnings per share we just discussed, 0.55 from 0.50, so plus 10%. Profit for the year also, you have here the total comprehensive income, which is also growing. Adjusted EBITDA everywhere you look, you will just see good developments. Funds from operations, we talked about this metric, which is used in the industry because it's a good signal of how much dividend they can actually pay. They are actually saying that they are paying 75% of FFO. Cash flow also positive. They had at the end of the 2021 year more cash at hand than they had at the end of 2020. What can I say? From this perspective, it's quite a boring company, so everything is developing in a positive direction, nothing spectacular. So total assets, this is also very important, 39 billions compared with 30 billions. Yeah, so what can I say? I mean, the value of the assets is key. It's a company in the real estate field, so the value of the buildings is fundamental. Then if you liabilities, of course, they took a little bit more debt, short and long term straight bonds, convertible bond, and Schuldscheins. So this is already in German. Debt metrics, loan to value, of course, a little bit deteriorating from 34% to 39%. Interest cover ratio 4.1x 4.9. This is actually improving. Equity, not that interesting. So, and then we have the European public real estate KPIs, which I told you that they are very technical and very specific, so I wouldn't bother that much with them, at least not in this presentation. Of course, you are welcome to study the topic if you are interested about it. What I wanted to look for was where they are explaining actually they are explaining the situation with I think we are too far ahead. Here is very interesting: capital recycling and shareholder value creation. So disposing a large amount of properties above book value while our share is traded at a discount to NAV highlights the large mispricing of the equity market to the real estate transaction markets. German and Dutch real estate assets are highly demanded, supported by the fact that these assets offer large spread over bond yields and benefit from long-term sustainable economic fundamentals. The disconnect between the equity and transactions markets provides us with the unique arbitrage opportunity to dispose assets above their book value and use the proceeds to buy back our shares at a significant discount, and thus creating long-term shareholder value. Since the beginning of pandemic until the year 2021, we have closed 4.7 billion of disposal with 3% margin over the book values and utilized the proceeds to buy back 2 billion of our shares at a steep discount to EPR NTA. So this European public real estate NTA, and repaid debt. In addition, we increased and extended the buyback program by 500 million until the end of 2022. Out of the 2 billion buyback volume, 1.6 billion has been executed already and 0.5 billion is remaining as of date of this report. The share buyback was not the only shareholder distribution during 2021, as we have additionally paid a dividend of 0.22 per share, in line with our dividend policy. As a result of value creation activities, our EPRA NTA per share grew by 10% in 2021 adjusted for dividends. So the share buyback programs executed at an attractive FFO yield will enable us to drive operational growth on a per share basis in the years to come and create higher FFO returns to our shareholders. So you see they are also doing these share buybacks, which are let's say an explanation for the reason why why the earnings per share have grown that much with 10%. All in all, it's an interesting company. I think if you want to invest in real estate. Rates are the easier way to do it. The dividend which they are proposing, 23 cent, the share price is around 5.23 right now, and the 23 cent per share are offering a 4.7% dividend yield, which is quite a good one. And I think it will prove in the future years, if the inflation stays high, it will prove to be a good play against the inflation. If you are interested in investing in real estate, buying shares with, just as I have said, with 5.23 or whatever is the price per share, it's far easier than buying a rental property, so paying hundreds of thousands of euros. You can invest in real estate through this way, and it's far more accessible to the ordinary investor. That would be it for today about Aroundtown. Just remember, this company was one that I have selected from Germany to invest in. I'm already invested in it. I have already linked the videos in which I was evaluating the rates from Germany and also the final decision. If you like this video, do not forget to hit the like button, subscribe to my channel, and hit the bell notification button, and you'll never miss an update on my side. Also, to comment if you have something to add in the comment section, or share it with somebody that might be interested about it. Below this video you also have links. You can create any eToro account and trade there without a commission or a fee. CFDs, however, so not the real shares, they are just let's say mirror images of the shares. However, it's fun and it can bring you some gains. And trading without a commission or fee is always a saving, no matter how often you are doing it, whether you are doing it once per day, once per month, or once per year. A saving is a saving. Below that link you also have an Amazon wishlist with hardware and software items which can help me improve the quality of my videos. That's being also very beneficial for you, because you will get better videos on my side. However, let's just be honest and say that from financial perspective, that is the most inconvenient for you. The easiest way through which you can support me from all the mentioned ways is to subscribe to my channel and to continue to watch my videos. I hope they are interesting. Once again, my name is Alex Petrescu, and I look forward to thank you for your patience and attention today, and I look forward to presenting to you with the next opportunity. Goodbye.